Hello everybody, welcome to Trader Merlin. A totally different show, a totally different outlook. Things are gonna be a little bit different from here on out. As you can tell, I might be even a little underdressed. A lot has happened over the past couple of weeks, and sometimes desperate times call for desperate measures. And one of the favorite things that I enjoyed with my time at Online Trading Academy is obviously working with all the amazing instructors, the amazing colleagues I got to work with over the years. But doing this show with the Chartmaster, or doing Power Trading Radio with the Chartmaster, was definitely probably the highlight of our day, and I just couldn't stop doing that anymore. So we've started our own thing. It's called Trader Merlin. It'll be the show. And I'm going to ask everybody's help. I know right now we've got a skeleton crew watching because we moved over from multiple sources, which we've been using for about the last decade. Kind of hard to transition those things over. So what we'll do as we progress through today's show is ask you guys to help spread the word to those who may have been part of the community before. And of course, encourage those of you who might never have been part of the community to engage. This will be fully interactive as it was with PowerTradingRadio.com. But with Trader Merlin, we'll be broadcasting just on our YouTube channels and Facebook under Trader Merlin, so you can search for those handles. Now, I could go on and on and on about all the different things we plan on doing. What I will tell you is this. We kind of have a clean slate, as you can tell by our set here. Very basic, not a lot of bells and whistles, yet we will be doing a lot more set design, development, implementation with different graphics packages, etc. But I want to make this show more for you, the viewers. Over the years, there has been a kind of dedicated path that Power Trading Radio had to follow. Not had to follow, but it followed. Right now, we have carte blanche to do anything that you, the viewers, would like to see. So what I would encourage you to do is you're always welcome to email me. You can email me at Merlin at it's not Merlin, it's at tradermerlin@gmail.com. You can send your emails there, and we'll get all thoughts, ideas, and everything hopefully implemented to the show. So if there's an asset class you want to cover, different ways you want us to cover markets, you want us to look at portfolios, you let us know what it is. Create your own ideal, perfect financial television show, which you want to run for 30 minutes per day, and I will do my best with the team to make that happen. There you go. So you got it up already. Lower thirds. All right. Let's start off with today. Today was an interesting one. I'm going to do the same thing I did before, which is kind of go over the markets, but I'm not going to necessarily do all 7. I want to make sure I can get through as much information as possible with our opening segments here. Right now, there'll be no commercial breaks. We'll just go straight through for probably about 1/2 of an hour. I really was hoping to have our maiden voyage for the show on Friday. Why? Because Friday was one of those events when you just look at the market and you go, I'm going 99% probability of a market bounce. I might even go 99.5%, that there's just this slim chance that that market would have gone down today. It did not. Not only did it not go down, it had a huge rally. And there are certain things that over my I started in 96, so we'll call it almost 24 years of doing this. There are certain events that happen on an intraday basis or a daily or a weekly or monthly that when you see these circumstances line up, it's one of those opportunities you go, I have to take advantage of it. So Friday was a pretty heavy day for me. As you guys know, last week, if you watched Power Trading Radio, I closed out all of my put positions and I built a substantial call position on the S&P and the Russell. To the tune of 190 calls. I scaled out of some of it today, but the reason was the way these markets set up. So let me go through how those markets set up. And of course, you guys have any discussion. Hello, Damien. Welcome. Gayer, ABC Markets. Welcome to our YouTube channel over there. Feel free to send in any comments and questions along the way, guys. I know I'm dressed down. I got my custom tailored Thailand shirt on today. I might even get a haircut tomorrow. I should have dressed up, but you know what? We're going to do things a little bit differently here. I can curse and drink alcohol on the show, too, which would make a really fun program. All right, let me start at the bottom. There are a lot of very interesting things happening with the yield. We had talked with John O'Donnell many times in the past about the possibility of negative yields, and it seemed like a stretch. It seemed like something that's just not going to happen. I read through my history textbooks and finance textbooks, and this has never happened before. We see other countries doing it, but we are America. It's probably not going to happen here. Well, if you watch what's been happening with the 10-year, and I have to bring that one up for you guys because I'm not 100% prepared today, the 10-year yield was crazy. Bring up the ZN futures. Here you go. First off, I've got to gloat because when you look at this chart, we were actually talking about this one as being a great breakout candidate to the upside. You guys can see this is Click Platform here. We had this little symmetrical triangle. We had a weak pole, I will admit. It's not the best, but generally when you have a symmetrical triangle after a rally, it breaks out in the direction of the previous trend. And this time, not only did it do it, but it just started to soar. Now remember, when you have this 10-year futures note like this, skyrocketing in value, that means that yields are going the opposite way. You're going the wrong way. We saw that in planes, trains, and automobiles. Well, we're seeing it right now as the yields are absolutely crashing. TJ is going to bring up the 10-year yield on Yahoo since I don't have the chart of the yield. What's noteworthy about this, and I posted this today on Twitter and my Facebook, is you are at historic lows. Let's go back 5 years. We've never been lower. That 1.33 handle was a low that it was the lowest point that we'd ever seen, and that was going back to 1.336 all the way back in July 5th of 2016. So it was like, wow, here we go. We are looking pretty weak. Look at the candle for this last, I guess this is a monthly or a weekly candle. That is absolutely crazy how far it fell. Now that may not seem like much. This is a weekly candle. Let me show you guys what this looks like on a monthly, just to put it in perspective. This is going all the way back into when the data was recorded for this 10-year. That's back to 1960. You can see clearly this trend is strong and continuing to the downside. The big question, and I think this really depends on what's going on with the international markets, is do you think that we will get down below zero? It's a trick question. And remember, if the 10-year is at 1.08, that means that your short-term, your 3-month treasuries are going to be well below, or should be well below, that 1.08. So this is interesting. I think we are going to start to see more talk about this. Right now, people are chasing yield, which is a sign that there's kind of global issues. They're looking for anything that's going to pay them, which, of course, is why we saw the dollar rally recently and this 10-year yield. So this, to me, I had it as number 7, but I don't know if I'm going to cover all 7, was really one of the uglier scenarios out there playing in today's market. Now, that was 1.08. That was a drop of 3.46% on that ZN. I think I had it on here. We'll just slap that right there on the ZN futures. Now, you can see a lot of hesitation. You have long topping and bottoming tails. Generally, when you have a long topping and bottoming tails, that's a sign of indecision. So it would not surprise me to see yields actually spike back up in the next couple of days, a little bit of a retracement from this colossal rally that you've seen on that 10-year treasury. No. All right, Damien says, yes, bourbon. You know what? I actually have a bottle of bourbon over there. I meant to start the show off, our maiden voyage, with a little glass of bourbon, but I'm probably not going to do that today. I'm on fire already. So, but yes, bourbon is definitely good. I think I have just straight scotch over there. All right, TJ, moving on to gold. GC wasn't a technically noteworthy chart pattern except for its colossal fall. Now, when you look at this one, keep an eye as to where things fell into. Hello, Rajiv. Good to have you with us, my friend from Vancouver. You look at where we've fallen into. These aren't the strongest demand zones, but boy, anybody who's an Online Trading Academy graduate, you know that this area right in here has some merit. There's some value to it. And notice if you took this on Friday based off it falling into this demand level, you had a nice gap up. And it pretty much stuck there. Yes, there was some ranges, but it stuck there for most of the session. That gave gold a 1.62% gain to 1592. Like it. Okay, Russell 2000. This is where we start to talk about those indexes crashing into levels where we think it's going to bounce from. I'm just going to go put a line right across these lows that you saw going all the way back into September and August of 2019. And lo and behold, we came screaming down there and ripped out today. I'll tell you percentages, and we'll go deeper into the explanation as to why it was almost a guaranteed long. This was just a very predictable move that if it was wrong, we could have had a small stop loss. If we were right, we'd hit a real home run as these markets soared today. Russell was at 1518. Right now it's at 1504, so it's down a little bit in our after-hour session. That was a gain of 2.85. If we look at here on the 5-minute, you guys can see what's happening in the after hours. A little bit of a give back, not too bad. Obviously, that last hour of the market was just a spectacular rally, as I think people are optimistic that the Fed is going to step in, and I'll bring that to our attention here shortly. Bitcoin is down or up 3.97% to 88.93. NASDAQ was up 4.5%. S&P was the one I really wanted to focus on because this is where I built a pretty big position. I bought 70 call options on Friday for this S&P, and you look at it and you go, well, why would you do that, Merlin? Because you're coming right into this area that it's had issues getting down below, right? If you look at this low point, we came almost down to the exact penny low from October 3rd of 2019, right? That low was 28.55 was the dead low of that little candle right there, 28.55. And you look at where we hit on Friday's session, you're looking at 28.53. So pretty much spot on. Now, by itself, and by the way, that's not your number one. Let me go to read through, and I'm going to revisit this one for you guys because to me, this is where a lot of the talk track needs to be focused on today. The number one actually was the Dow, and I don't have the Dow futures up here. I don't have the YM on this quote screen, but Dow was up almost 1,300 points today, guys. One of the biggest moves it's ever had to the north side, and it's justified. It's understandable because all these index came smack down into demand zones, and there was something even better behind the picture. So demand zone's fine, but there's one other piece I'm going to show you here in just a minute. All right, let's see. Number one is crude oil. That's the last one, and then I'll go into what caused all of this. Here's crude oil on the day, 6% move. I mean, that's a beauty of a move, although let's be honest, I think it was long overdue. You had an 8-day sell-off in crude oil that was savage. I mean, just absolutely brutal. You fell from, on the 20th of March, you had crude oil hit a high of $54.66, and today bottomed out down around 43.32. That is a gigantic move. So you have a bullish engulfing pattern that formed today on crude oil, which does bode well going forward, and that was number one. All right, so I got to keep an eye on the clock today because I'm not taking any breaks. We talked about the major indexes out there. Now, and all the time I've been trading and investing, there's all sorts of little things that I like to look at that always seem to be the odds enhancer. You know, so for example, you read books on dating, and one of the telltale signs that a girl is interested in you is if she flicks her hair, she's smiling at you and she flicks her hair. It's one of those things you look at and you go, yes, she's interested in me. It increases your chance of success in that situation. Now, of course, in all aspects of life, there are different things that give us that little extra edge or that hint that things are going to go one way. One of those is reading retail populations. Let's be honest. Well, now, since I am no longer under the umbrella and guidance of FTC and corporate, I can say things I normally wouldn't say. So when you look at the markets, there are generally two camps of people. There are the astute, educated, whether they are smaller investors or big-time players, or there are the complete neophyte idiots who don't follow any rules, have no idea what they are doing, and think they're going to get rich quick. These are the same people that complain that getting education, financial education didn't work for them because they didn't follow any rules. So of course you're going to lose money. It doesn't matter who teaches you. You could take a class under Warren Buffett, and you're still going to lose because you don't follow any rules. The other part here is understanding that there is a behavior amongst people that's the follow the herd mentality. That sell-off that we saw over the last 7 or 8 days, which dropped these equity markets about 16%, started off as a small little fear about coronavirus. Then it accelerated a bit more. And then all of a sudden, every major media news network is making this seem like the movie Outbreak, where we all need to go buy masks, hide in our cellars, don't go out because we're all going to die just from opening your eyeballs in public. Really? How many people have died from the common flu in the United States? It's far greater than the coronavirus. Far greater than the coronavirus. Could it get worse? Yes, it could. But right now, it's full-on panic mode. So you have this fear precipitated, and it turns into generally retail population becoming lemmings. They all start following the herd. It's the panic selling, which we had talked about on Power Trading Radio as being a very logical thing. We knew there was going to be a move down like this, the black swan, if you will. I actually think that we're not done, but we did get a very sharp, aggressive move because the herd mentality. You got to ask yourself, though, when does that herd mentality stop? It stops when everybody sells and there's no one left to sell or nobody panicking. So what metrics do you look at to gauge when that fear is out there? It's pretty simple. No problem, Gary. And feel free, guys, if you have any comments or questions, feel free to send them on in here as we progress through today's show. I'm kind of going to be on all over the place with regards to what I cover on the show today. When you look at the fear gauge, one of those to me is volume. Now, I know some of you follow a specific trader out there who claims to be an amazing trader out of Chicago. Yeah, let's revisit that another day. But this individual says that volume doesn't serve a place in the financial markets. If you don't think that volume serves a place in financial markets, then you're either deaf. Because volume in a stereo, does it matter? Heck yeah, it does. Volume can be so faint you can't hear it, or so loud your ears are bleeding. Volume matters. Volume represents fear, emotion, greed, all of those things that we want to capitalize on. Warren Buffett's been quoted many times as saying, when do you want to be buying? When there's blood in the streets. You know what the blood is represented as? Volume of people selling. So how do we see that? TJ, bring me up, I'm going to use a different platform here just because it's easier for me to work with. Bring up the SPY. Now, this is one of my favorite things to look at when I'm mapping out long-term trades, and that is going to be looking at what's called climactic volume. So I'm going to go back here a little bit, and if you look at these chart formations here, you don't see a buildup, right? Volume has been, yes, there's been some spikes here when markets were selling off, but for the most part, it stays fairly average. There's been no real escalation, like a mountain peak forming. But watch what happens when you start to get near the end of February here. All of a sudden, volume starts to spike. And you notice right there, it's at 160 million shares of SPY were traded, which equals that spike from back in August, eclipses that one from back in December. We go forward, you're well above it. But notice what it is. It's this peak of volume. We peaked out here At 300, well, give me the exact number there, TJ. It's 385 million shares of SPY were traded on Thursday. Was that Thursday or Friday? On Friday, excuse me. So basically what you have there is the fear factor. You have people screaming, people panicking, freaking out. Why? Because markets are tanking like that, right? You have a lot of panic selling going on, but look at the move. It's understandable. But where did it fall to? You had a panic move that fell right into an area of demand. Not the greatest, but at what point would you have bought anywhere else? There might have been an area to buy here right around that 308 level on SPY, but really you get down here towards that 285 mark, now you're talking. And notice the move it had out of there. This 2-day rally, positioned properly, based off demand with the right stop losses, you're looking, I don't know the exact percentage move there, that's a 7% move in the SPY just a couple of days. And positioned properly, that's a ton of opportunity. Steve Hall says, you just convinced me to hide in my basement. Steve, get out of your basement. Don't do it. Yes, Kevin, I am live right now. We're gonna be, it's a new change. We'll be doing this every day, folks. So Rolo and Kevin and Steve on our Facebook, thank you so much for the participation. We'll be broadcasting on multiple channels. So feel free to send in questions. I'm happy to do as much as I can to help answer your guys' questions. Damon said the futures market made nice hammer formations. Yes, that as well. And this is kind of tricky, right? Because those that are futures traders, you know that the pictures on futures are going to look slightly different than they are on the individual ETFs, because obviously futures have greater trading hours and ETFs do not. The point I was making here is that climactic volume on SPY, coupled with an aggressive 16 to 17% sell-off over 7 days into demand, made the perfect storm for a market rally out of here. It was one of those days you're going, thank goodness. It's funny because all weekend I had friends of mine going, man, you're crazy. You shouldn't have that big of a position out there right now. That's nuts. It's like, well, I don't think so. It's questionable. I could be crazy. I don't know. You can ask all my past relationships. I think they'd all agree I'm crazy. But you had this just setup that was perfect. Now, what if we're wrong? Because obviously you want to protect ourselves. That's the most important thing, is looking at that downside risk. So with that S&P, if you were going off this low, and I'm not going to take the time to break this apart and go past those lows and find the exact demand zone, right? I'm not going to take the time to do that. But what I do want to go is show you, zoom in a little bit more, TJ. We're kind of putzing around with the scaling here. Sorry, guys. You go down below these lows that go all the way back into August of 2018 and maybe put your stop loss at 218. Well, that's a $3 stop loss. That's not that bad, right? That's a 1% stop loss out there. So you could easily have done it just below these lows. That would have been fine. Of course, we could refine it down and probably get better entries. But I don't know. I think it's one of those ones you look back and go, this was in the works. I closed out of my puts probably a little early, I'll be honest. I might want to stay in a little bit longer, but I caught a bunch of that move down, and now I'm looking forward to catching a nice big move back to the upside. The question from ABC Markets is, which calls did you buy SPX Weekly's strike price? I wanted to give myself some time here because I didn't think that this would be a knee-jerk reaction and it would immediately pop. I did not think we would see this big of a rally today, but I did think that the world is going to kind of shrug it off and go, look, we overreacted. Markets are still okay. I do think that second quarter earnings are going to be the part that actually destroys us. I think we are not out of the woods yet. But what I did is I just bought deep out of the money calls, ABC Market. I think right now my position's on the 323s for the SPY. But I have May, right? So I bought the end of May. I'm buying myself some time here because I think that this will have a more of a retracement to the upside. I won't be holding it to 323, which is right. TJ will put the line on the screen here for you. I'm not going to be holding it, but you guys can see why. It's the origin of that real big move there. That's where I kind of would be focusing on, and that's where I am focusing on. Probably if we get up into the 315 mark tomorrow, if we get there, I'll probably close out another portion. As you guys mentioned, I had, let's see, I have 140 and 50. So I had 50 S&P calls and 120 Russell calls. So I sold out at 20 calls today on SPY, locked in some profit there, and I sold out of 20 calls on the IWM as well. Now there are some other things out there I might want to look at, might want to trade and look at different parts of the market, but I was just in these major two indexes predominantly because of where they bottomed out, because of the fear, because of that emotional spike. It was just screaming at you, saying the lemmings were, when you see that volume like the bottom of the chart that we saw on Friday, it was the lemmings launching themselves off the cliff, just not knowing what they were doing. They were just panicking and jumping off. And I made a joke with my old mentor many, many years ago. Says, when the lemmings are jumping off the cliff, what do you want to do? You don't want to run with them. You go down the hill the other way, you grab a net, and you catch lunch or dinner or live forever off the meal that you collect from those retail investors who are jumping off. So I really wish I could have done this on Friday, because it would have been, it's kind of one of those things where like, well, I told you so. But my actions are backed up with some of my trades, so it was actually pretty good out there today. All right, let's see. I want to make sure I get some listener questions out here. Close below 12-period moving average on the monthly. Alarm. Yeah, and this is tricky. So, Kevin, there are different things that we look at, certainly from a long-term perspective, as triggers for going bearish or in a portfolio, or maybe going to cash and rebalancing things. And we won't go into the details of that. If you guys want, a strategic investor obviously is one of the best places to learn about that. But one of the rules that you can put in place is obviously a 12-period moving average on a different time frame, like a weekly or monthly, depending on what you're looking at. The challenge there is you look at what happened to this market, and I wouldn't say that this market is a trend reversal. I know it seems inconceivable to say that. This is a panic sell. This is the media perpetrating bad news, spreading it around, and getting everyone to freak out. Those actually can represent great buying opportunities, tremendous buying opportunities, which is why I loaded the boat. Well, I didn't load the boat, but I bought a pretty sizable position on Friday. The challenge here is saying, what is that end result from all of this? How far will coronavirus push these markets to the south side? Will it get much worse? I don't know, right? We're starting to hear about it more and more cases spreading out. And if it does start to slow down factories, start to slow down manufacturing and services and production, yeah, those second quarter earnings is what I'm really waiting on. And I'm really looking forward to doing the show when second quarter earnings come out, because those earnings are going to be crazy bad. I think you're going to see, pull up UAL, TJ. Let's look at United Airlines, just to give you an example. Last week on Power Trading Radio, I brought up a picture of my buddy Josh, who's traveling to Asia right now. And he was on United. I think it was a partner at United, actually. But the airplane picture that I showed, and if you want, I'll try to bring it up on tomorrow's show, there was nobody on the plane. There were like 5 people on a plane that should have hundreds of people. It's crazy. So look at United Airlines. I mean, you go back to really kind of before this, or maybe when it started, December, United Airlines was at $93. It bottomed out today, hit a low. It's so hard for me to read this dang font. 57. So you have 93 to 57. You know it's already being priced in. And look at the volume on it. Today, actually, I'm going to tell you, if you go back to what I just said about markets, about price, about fear, about volume, look at UAL right now. This is a hammer formation. This is one of my favorite formations out there. It's a candle. It's not a candle. It's a hammer formation at the bottom of an aggressive downtrend on climactic volume. This might be a play for tomorrow. I will see how it pans out. I might actually jump on this one. And because it's a different format on the show, I will show you the basics of what I'm going to be doing on UAL tomorrow if I can. I'll probably play with options because it allows me to limit my risk a little bit more. And I'm actually, because it's so early in the week, I may actually take a stab at weeklies if there are weeklies on UAL. So basically what I'm going to be looking for on United Airlines is there a break above this high? And I'll make sure we get the snap mode. High that we achieved today. This is a beautiful hammer formation. It's actually called a dragonfly doji, which is one of the more strong formations. And you guys have to understand, for those of you who might be joining us that don't understand candlestick formations, take a peek at what happened here. It really had an aggressive sell-off all day. This is one gigantic red candle, and then rebounded and rocked to the upside. So you're closing right at the high. That's a really positive thing from a candle perspective, and I really do think that this could have a big move up tomorrow. All right, so I would be looking at some probably shorter-term options. I don't want to hold United Airlines much longer. I think it's a dangerous one to hold. But you kind of couple that with the things we talked about on the show today, which are aggressive sell-off, climactic volume. I'll have TJ maybe put this on a weekly or go way out to a weekly so we can see if there's any demand that this might have. Oh, God. Are you kidding me? This is the same thing we saw with the SPY. Look at this double bottom formation that we formed all the way back in 2017. That's where we bottomed out at today, like to the tick. Damn it, why was I not watching United Airlines today? You guys need to send me alerts on this stuff. I just don't have enough eyeballs out there. I know a lot of you are very, very active, so share the wealth. Be my eyeballs sometimes. As TJ has mentioned earlier, I do have Trader Merlin at Yahoo is a way for you guys to get in touch with me. I'm going to change things a little bit. We'll have, once I can get the website up, we'll put a website up here so we can have everything archived. We'll break it apart specific segments and obviously do a little bit more with the set design in the show. But boy, United Airlines could potentially be a very, very nice play to the upside here. And that, of course, is a weekly time frame. So it has been moving up. When we look at that dot D, you notice the picture there looks exactly the same. That's weird to see. Of course, it's the first day of the month, so I guess the weekly and the daily are going to look identical. All right, let's see. Markets have a 7.5% circuit breaker due to any reason, not just the virus. I don't know if it's 7. I actually think it's more than that. I'll look at the breakers again. They're always changing them. So, oh yeah, Gmail. Sorry, it's Trader Merlin at Gmail. Sorry, TJ's correcting me. There are actually 3 levels of circuit breakers that go on during the day, and I'm glad you brought that one up, Damien. I'm going to make a note to myself, and tomorrow's show we'll talk about circuit breakers because I think that that's very critical. Hello, Jerry Three Feathers. Good to have you back with us, and Gair. Let's see. Let's appreciate these hands-on insights. Yes, it's a little bit different than what we normally do. Airline sold off too much, in my humble opinion. I do agree. It's tough because I think that it was a knee-jerk reaction that was overdone on those airlines right now. However, I do think that they might be in for some more downside in the long term. But right now, I do believe there's a knee-jerk reaction that's going to pull it back to the upside, just like the equity indexes. So keep an eye on UAL tomorrow. I'll let you know on tomorrow's show if I make some trades on that one. If you guys have anything else out there, let me know if you want specific trades or you got something that you like to analyze or look at. Who knows? It might actually be a trade that I take. So let me know what those are. Circuit breakers halt trading on the national. Yes. So you said 7, 13, and 20. I think it's 7, 13, and 21 if I'm not mistaken. But yeah, I'll map that out tomorrow and explain kind of how that all works for everybody. All right. So we talked about the 10-year. We talked about oil. We talked about indexes, climactic volume. The last piece here is really kind of more about what's going on tomorrow. Normally what you guys see me do here is do a part called the week ahead, which I don't have prepared at all. Tomorrow, there is some economic news coming out that you should pay attention to, and I'll let you know what that one is. It's actually not even tomorrow. It's actually in the next couple of hours right now. You're going to see Australia, it's 7:30 Pacific time, come out with a rate announcement. They're going to cut rates by 25 basis points, which might give the Fed more fuel to cut. Now, right now, they've already priced in a 50 basis point cut here in the U.S. for the March 18th meeting, which is why we saw such a nice rally out there today. Here's my take on it, and I'm going to try to wrap this up in a couple minutes here because TJ tells me I got 30 minutes to do this show, and I haven't taken a breath, and I probably have paste coming out of my mouth at this point from talking so much. The economic data today from Europe was pretty bad. You had, across the board, almost everybody except Spain was under 50 on manufacturing production. Spain came in at 50.4, but you had the Swiss franc was under 50. You had Italy, France, Germany, and the EU as a whole under 50 on manufacturing PMI. British pound was at 51.7. So that's showing you that Europe is continuing to show contractions out there, which is not very good. On the positive side for the U.S., you had construction spending way higher. You had a 1.8% gain in construction spending, which is odd for the month of January, February, whichever report that was for, because usually they're winter months. So that's nice to see that money coming into the economy, maybe more home improvement, etc. Again, tomorrow the major thing happening is going to be, today the major thing happening is going to be that rate announcement for the U.S. tomorrow. You don't have too much with regards to powerful economic indicators. You have TIP IBD economic optimism numbers coming out, which I don't think is that great. You do have a couple FOMC members speaking tomorrow, but other than that, there's nothing groundbreaking. You do also have members of the Bank of England, Governor Carney will be speaking tomorrow. That's early in the morning, and then Australia with GDP. So that's pretty much it for tomorrow. As I progress, guys, I will start doing more graphics. I don't have all the graphics set today. This is kind of a quick decision to be doing this show. Where do you see the short-term resistance levels? All right. I'm assuming ABC markets you want to talk about on SPY, on the broad markets. Yeah, my pleasure, Steve. This is one of the things we love to do. So, and what I'm going to try to do is, you guys have never actually heard TJ on the show. He's actually in the sound booth over there, but in order for him to interact on the show, I need to have an earpiece in. I hate working with an earpiece so I can hear him, but we might actually incorporate that in because I'm not going to have guests as often on the show. I will try my best in the near future to get more guests on the program, but for right now, it's just going to be me and market analysis going over charts. So I would, again, I'm going to encourage you guys to do whatever you can to interact with me. All right, so let's do, I'm going to do on the ES, we'll do the S&P futures. If I get that chart up here. All right, why are you not working for me? I don't know why my platform just doesn't, my trade station doesn't want to work for me today. It's saying I don't get these data feeds. Why don't you link it up to my chart then? Let's see if I can bring that one at ES. Now these numbers are going to be pretty off. Here is your ES continuous contract. Because this is continuous, it's going to be slightly different. I haven't done the adjusted. This is the unadjusted. You know, you look at this one right here. You have a lot of gaps, or sorry, a lack of gaps on it. So the question becomes, where do you think it's going to go? I'm actually going to bring up the ETF on this one and go to SPY, because then you start to see gaps. Obviously, there's, to me, a gap fill, which looks like it occurred a couple days ago on Thursday, which would bring the SPY right around to 311. But I do think if we do get that big rally back up and a spike up of optimism, I don't see it going back up much higher than 323, which is where I have my calls purchased at for SPY. Obviously, if we do get up to 323 on SPY, I'll be pretty darn happy. But as I mentioned, I'll probably sell out of some of those tomorrow at about 315 if we get to 315 tomorrow, and lighten my load as we go up. Because my goal on this, guys, I had been short. I'm actually trying to play these bigger swings, and if we get a nice rally up, I'm actually looking to go short yet again. I do believe that we will see more downside movement as the fear that our media has such a wonderful job of spreading out there will continue, and coronavirus will become the hot topic. Of course, you notice how much the political landscape has changed. No one's really thinking about actions by the president or the Democratic conventions or none of that stuff. It's just straight coronavirus right now. So imagine if we start getting fear from other areas out there. I think we could have a much bigger downside movement. All right, well, thank you guys. I know today was we're talking bare bones. I mean, I got no background behind me. I got a floating chart, but we're going to start working on some more segments. Again, I would encourage you guys to interact with me. You can obviously stay in contact with me if you're on our Facebook page. You can leave comments down on YouTube. If you like today's show, please give us a thumbs up. There are many of you who are part of the community. They've been a part of it for a long time. Please do us a favor, since this is the first show. We've been doing Power Trading Radio for almost a decade. And haven't done much marketing. I would love it if you guys could help me spread the word here, and also let me know what it is that you want us to talk about on a daily basis. So let me know. Send it on in at Merlin at Gmail, or TraderMerlin@gmail.com. I swear I'll get that down at some point. I'm glad TJ puts it on the screen for me. TraderMerlin@gmail.com will be a way for you to get in touch with me. You can also contact me at Facebook under Trader Merlin, and those are the ways to get in touch with us. That will do it for today's show, everybody. I made my 30-minute mark without a break, without a commercial. Thank you all that joined us today for our maiden voyage. Hope you enjoyed it. Send in your feedback. Let me know what you want us to talk about. I'll see you tomorrow, hopefully at 2 p.m. tomorrow, but we'll see. I think 2 p.m. is going to be the regular show hour. Until then, see you tomorrow, guys. Take care.